A trading gap is exactly what it looks like. It's simply a space in between price, and it normally happens in between trading hours or sessions. So you most commonly see gaps on the smaller time frame, the 15-minute, the 5-minute, the 1 minute even. Sometimes you will see them on the higher time frame, but more commonly on the smaller time frame. There are two ways that I like to tackle the gaps. The first way is using the gaps as imbalance and using the candle before the gap as an OB. And then the second way is much more common, and you'll more than likely almost always see a Sunday open with a gap. And the reason why I don't trade on Sundays is because I find that a lot of traders chase price and they actually become targets for liquidity grabs. I'll show you exactly what I'm talking about. First things first, guys, we want to establish the trend. What is the trend here? So we want to find that on the higher time frame, of course, but for the purpose of this video, we're going to use the 15-minute time frame. So guys, I'm just going to simply show you that these lows are getting higher, right? Look at the lows. 1, 2, 3, they're getting higher. This is an indication that the market wants to go up. So as I'm looking at this gap that has opened on Sunday, I'm anticipating price to continue to climb up, get a lot of traders into buys, and then we're going to come back down, fill up the gap. But the second part of this is really interesting, and you have to listen up to be completely prepared for this. We want to establish and identify liquidity. So not only will we more than likely come back for this gap to fill it in, we may go beneath it if there is any liquidity. So that's what you want to look out for. The first thing that I'm noticing is that we have some sell side liquidity, which is these lows right here. All right, I want to go ahead and target these lows. I'm noticing that we have imbalance, right? We have some imbalance in here. I'll go ahead and mark that up just for the purpose of this video. You don't have to get your charts all colorful, but I do like for people to establish what it is that they're looking for. So we have some imbalance in there. We have this low, and we have right here. We have this low right here, and be careful because you can absolutely use this as an order block. But if there's liquidity beneath that, this OB, then you'll definitely get stopped out. I'll show you that as well. And right beneath this low, we have more imbalance right here. So before you chase price on Sunday, guys, you want to be very mindful of what you're doing. So right beneath that, I'm gonna use an OB, right? This is a down candle before the up move. But as you know, if you're watching my videos, I do use the same kind of candle. So I'm not seeing any liquidity beneath that. So it looks like it's all good. This may be a space where I want to take the market up, right? So here's that gap. I'm going to press play. I want to show you what happens on Sunday and why I don't chase price. And then I'm going to also show you which OBs to pick. Like if there's an OB and then there's imbalance right beneath it, do not select that order block. So let's see where a lot of retail traders may get in on Sunday's open. I know you get excited as Sunday is opening and you want to participate, right? The market starts to climb up. People get really, really excited, guys, and they start to buy. Okay, here's that imbalance. Here's the imbalance. So as we go into Monday, price is starting to come back to fill in the gap. But I'm expecting, due to experience, price to come beneath that gap and start to target a lot of this liquidity down here. So I know that the market is going up, but I'm not going to buy until we sweep out all of this liquidity. So I'm going to press pause right here really quickly. If you selected this order block as your OB to go up, you would have gotten stopped out. And why is simply because there's imbalance right beneath it. This is why I like to get the charts really colorful so that I can show people exactly what's happening here. So price comes down, takes out all of this sell side liquidity, this low, and it fills in this little tiny space of imbalance. But remember, guys, we're not anticipating price to create a new low. We're anticipating the market to continue up. So we should not be getting a low beneath this low. And you want to hop down to the 1 minute time frame, and you want to start to see the market creating higher highs, higher lows. So this is what it would look like on the 15-minute, but on the 1 minute time frame, you might see something like this. And that's what you want to look for. You want to see continuous breaks of structure to the upside on the 1 minute time frame before you get in. You want to probably get in at a retest, a pullback, and you want to take the market up. So now that price has come into my area and I've already checked to see that it's being respected on the smaller time frame, what I want to do is I want to target a high. So I'm going to go ahead and take this out because now I'm expecting the market to go up. Right there, I'm going to simply place my stop loss. You want to have your risk to reward set up. My minimum is a 3-to-1. I do not go for 1-to-1s or 2-to-1s. And we want to target the nearest high. Remember, guys, this is simply trading the gaps. We're not going to go for a high on the daily time frame. We're just targeting these gaps. So right here, this is 577 points. This is a 5.36-to-1. Really nice setup, guys. We're simply following where price is showing us, and now we're going to target this high. Let's press play. Don't get scared by the candles, guys. Remember, trust your analysis. Your risk to reward should be set up, so you shouldn't be afraid. Okay, price is going up, price is going up, price is going up. Okay, and this is a Monday. This is 8:30 a.m. This started around London session on Monday. We went for that high and the trade is complete, guys. This is how I like to tackle the trading gaps. Thank you for watching.